You know, the game of trading. It's not what they teach you in those glossy online courses. It's not about finding the perfect indicator setup or chasing some magic formula. That's the lie they sell you, isn't it? Let me tell you the truth. The raw, ugly truth that separates the people who make money from the people who just spend it. The market doesn't care how smart you are. It doesn't care how much tuition you paid for your fancy trading software. It only cares about one thing: discipline. And the only way you get discipline is through pain. You're watching this because you want to know how to take your trading to the next level. You want the indicators, the signs that you're ready to move from guessing to actually knowing. Well, I'm going to give them to you. But they're not technical indicators. They don't show up on a chart. They show up in the mirror. This isn't a quick lesson. This is a deep dive into the psychology of winning. So sit down, clear your head, and listen closely. Because this is the stuff that saves you a fortune in losses and makes you a fortune in profits. The whole game hinges on realizing this fundamental fact. Trading is the only profession where the primary skill required is the ability to do absolutely nothing for extended periods of time. Doesn't that sound absurd? That you get rich by being inactive, but that's where the money is. The money is in the waiting. The money is in the patience. Now let's talk about the trap. The psychological trap that has destroyed more novice accounts than margin calls or bad news combined. Indicator number 1, the novice trap. The vast majority of new traders, and frankly most experienced but unprofitable traders, are caught in the desperate need to always be in motion. They feel this constant gnawing compulsion to force profits out of a market that is not yet ready to move. They treat trading like a 9-to-5 job. They clock in, they sit down, and they feel like they have to justify their presence by clicking the mouse. They see a flat chart, they see a consolidating price, and they think, I must be missing something. It's the fear of missing out, isn't it? But it's deeper than that. It's the need for validation. It's the need for action. You know that feeling? You open your platform, the market is drifting sideways, volume is flat, nothing is happening, and that little voice in your head starts screaming, do something! You're wasting time. The pros are making money right now. Why aren't you? That voice is a liar. That voice is a thief. The novice trader is defined by the belief that time in the market equals profit. They are trying to scalp nickels and dimes out of the noise. They are trading the sideways drift, trying to predict the next 5-cent wiggle. And what happens? They enter a trade, the market is choppy, they get stopped out, they re-enter, they get stopped out again, and suddenly they've lost $100 in commission and slippage, and the market hasn't actually moved anywhere. They are trying to force a trade where the market is telling them very clearly, wait. Do you see what I'm saying? The impatience of the novice creates a self-fulfilling prophecy of loss. They introduce volatility into their own account through overactivity. If you are constantly opening and closing positions, if you are trading every single day just because the market is open, you are not trading at a professional level. You are feeding the machine. You are paying the commission, and you are creating unnecessary risk. The first step to leveling up is recognizing this sickness, this craving for action. It's an addiction, like a gambler who can't leave the table even when the cards are cold. When you start to feel that itch, that need to click the button just because you're bored, that is the market testing you. And if you fail that test, you pay the tuition. Let's move to indicator number 2. This is the profound shift in perspective. Indicator number 2, the internal enemy. The first true indicator that you are ready to level up is the profound, gut-wrenching realization that your biggest enemy is not the market, but the impatient, emotional voice in your own head demanding action. You spend months, maybe years, blaming the market. The news was rigged. My broker is hunting stops. The algorithm screwed me. You point outward. You externalize the failure. But the moment you level up, the moment you become dangerous to the market, is the moment you stop pointing outward and you start pointing inward. You realize that the market is just a massive, indifferent ocean. It doesn't care about your trades. It doesn't know you exist. It is simply a reflection of collective human emotion, fear and greed, and it is utterly predictable in its chaos. The moment you accept this, the battle changes. It stops being a battle against the price action and becomes a battle against yourself. You realize that every bad trade you took, every time you chased a runaway price, every time you averaged down on a loser, every time you got out too early because of fear, that was not the market's fault. That was your lack of discipline. That was the emotional voice overriding the logical plan. This is a painful realization. It means accepting full 100% responsibility for every loss. Have you reached that point yet? The point where you look at a losing trade and instead of saying, "Why did the market do that?" you say, "What rule did I break?" If you still blame the news, if you still blame the talking heads, if you still blame the volatility, you are still a novice. The professional trader knows the market is a mirror. It reflects his own fears and his own greed back at him. When the professional loses, he doesn't curse the screen. He examines his process. He looks at his own mental state. You must become ruthless in identifying the internal enemy. What does that enemy sound like? It sounds like hope. It sounds like fear. It sounds like impatience. It sounds like, "I'll just move the stop loss a little bit, it has to come back." It sounds like, "I missed the entry, but I'll jump in now before it goes too far." It sounds like, "I'm up 10%, I should take it before the market takes it back." When you truly level up, you don't fight the market. You manage your own reaction to the market. You understand that your job is not to predict the future, but to execute a plan flawlessly when the conditions are met, and if the conditions are not met. You sit still, you shut up, you wait. This leads directly into the third indicator, which is perhaps the most difficult discipline to master. Indicator number 3, the discipline of inactivity. Following the primary rule of the great operators, the rule of the Titans, mastery is demonstrated by the counterintuitive discipline of sitting and waiting. You understand that the great money is made only when you have undeniable confirmation of a major movement. This is the Livermore rule, isn't it? The big money is not made in the buying and selling. It is made in the waiting. The amateur wants to be in the market all the time. The professional wants to be in the market only when the odds are overwhelmingly in his favor. Think about it this way. You are not a sniper taking a shot every 5 minutes. You are a hunter sitting in a blind, waiting for the perfect deer to walk into the perfect clearing. You don't shoot at shadows. You don't shoot at rustling leaves. You wait for the target to be clear, stationary, and perfectly lined up. If you take a shot every time something moves, you waste ammunition, you scare away the real quarry, and you reveal your position. In trading, this means you stop trading the chop. You stop trading the noise. You stop trading the small movements that require perfect split-second timing just to grab a tiny profit. The great movements, the ones that pay for years of living, they don't require split-second timing. They require patience. They require you to get on the train, and then they require you to sit still and ride it. You must learn to recognize what undeniable confirmation looks like for your specific strategy. If you trade breakouts, is the volume confirming the move? Is the retest holding? If you trade mean reversion, is the price action showing exhaustion? If the confirmation is murky, if you have to squint at the chart and try to convince yourself that the setup is there, then the setup is not there. The trade that makes you rich should feel easy. It should feel obvious. It should feel like you're taking candy from a baby. If you are struggling, if you are agonizing over the entry, if you are constantly adjusting your stop, you are forcing the trade. And when you force a trade, you pay. Let me tell you, the market has a way of punishing urgency. It rewards observation. The amateur sees a price moving up and rushes to jump in, only to buy the exact top before a pullback. The professional watches the move, waits for the pullback to confirm the strength, and enters only when the market proves the trend is still intact. Does that sound boring? It is. Professional trading is profoundly boring. It's hours and days of watching, analyzing, and waiting. But the moment that setup appears, the moment the confirmation is undeniable, the professional acts with cold, ruthless efficiency. You see, the discipline of inactivity is the hardest work a trader ever performs. It requires more mental strength to sit on your hands when the market is ticking than it does to execute the trade itself. Why? Because your ego is demanding action. Your emotional brain wants the rush. But the disciplined trader knows that if you are trading out of boredom, you are gambling. If you are trading out of necessity, you are desperate. You must wait for the setup to present itself to you rather than trying to drag a setup out of the market. That shift in mentality from hunter to patient spectator, that is the mark of the next level. Now we come to indicator number 4. This is where the rubber meets the road. This is the difference between a perpetual amateur and someone who is truly managing capital. Indicator number 4, the demand for absolute accuracy. Taking your trading to the next level means abandoning the illusion of hope and accepting the brutal reality that the market demands absolute accuracy in timing and position sizing, or it will swiftly and ruthlessly take your capital. Hope is the most expensive word in the trading dictionary. Hope is what makes you hold a losing position. Hope is what makes you average down thinking, it can't possibly go lower. Hope is what makes you turn a small, manageable loss into an account-destroying catastrophe. The amateur trades based on hope. They hope the news will be good. They hope the stock will rebound. They hope their initial intuition was right, even when the chart is screaming that it was wrong. The professional operates on probability and risk management. Hope has no place in the equation. When you level up, you realize that the market is not a benevolent entity that gives you second chances. It is a machine designed to transfer wealth from the impatient and the hopeful to the disciplined and the realistic. This accuracy requirement breaks down into 2 crucial components: timing and sizing. Let's talk about timing. We already discussed waiting for the setup, but timing is the execution of the entry. If your entry point is sloppy, if you miss the confirmation by even a small margin, your risk-to-reward ratio is instantly compromised. If you enter too early, you get chopped up before the move begins. If you enter too late, you are chasing and your stop loss has to be wider, meaning you risk more capital for less potential gain. The market demands that you hit your entry zone with precision. But precision in timing is useless without precision in position sizing. This is the ultimate test of psychological control. The novice, when they finally find a good setup, gets greedy. They load up too heavy. They risk 10, 15, maybe 20% of their account on one single trade because they are convinced it's the winner. And what happens? Even if the setup is 80% likely to succeed, if they risk too much, the inevitable 20% failure rate wipes them out. Or worse, the normal market fluctuation, the temporary pullback that always happens, causes them such extreme psychological pain that they exit the trade prematurely, locking in a loss just before the market moves their way. You cannot think clearly if the position size is too large. If you are risking so much that a small pullback makes your heart pound and your hands sweat, you are guaranteeing an emotional exit. Leveling up means adopting the mindset that no single trade, no matter how beautiful the setup, is worth more than a small, calculated percentage of your total capital. You must accept that you will be wrong frequently. Your edge is not in being right 100% of the time. Your edge is in managing the capital so that when you are wrong, the loss is tiny, and when you are right, the profit is massive. When you have truly leveled up, you can take a 2% loss on a trade, shrug, and immediately start looking for the next setup, with zero emotional hangover. Why? because you knew going in that 2% was just the cost of doing business. It was calculated, accepted, and managed. If a loss sends you into a spiral of revenge trading, you haven't leveled up. You are still trading on hope and ego. The market demands cold, hard, mathematical reality. Now we wrap this up with the fifth and final indicator. This is the synthesis of the first four. Indicator number 5. The quiet confidence of execution. The final indicator that you are ready to take your trading to the next level is the quiet confidence that allows you to execute your plan perfectly, without hesitation or self-doubt, and then walk away from the screen. It's the ability to pull the trigger on a major position, a position that represents a significant profit potential, and then immediately switch off the monitor and go live your life. Why can the professional do this? Because indicators 1 through 4 have been mastered. They are no longer trapped by the need for action. They sat patiently for days, maybe weeks, waiting for the perfect setup. They have won the internal battle. The emotional voice is silenced because the discipline is automatic. They are adhering to the discipline of inactivity. The setup was undeniable, confirmed, and easy. And most importantly, the position size is accurate. The risk is managed. The stop loss is set where it needs to be, and the trader knows mathematically that if the stop is hit, the damage is acceptable. When these 4 elements align, the execution of the trade is boring. There is no adrenaline rush. There is just the mechanical fulfillment of the plan. If you are still glued to the screen, watching every tick, praying that the price doesn't hit your stop, your position size is too large, or your setup was weak. The next level of trading is defined by the absence of drama. The amateur trader is constantly riding the emotional roller coaster, euphoria on a win, despair on a loss. Their results are erratic. The professional is stable, their emotions are flat. They know that a good trade and a bad trade are simply data points. They know that their success is not determined by the outcome of the next trade, but by the integrity of their process over the next 100 trades. If you can enter a trade, set your stop and target, and then genuinely step away from the computer for hours, knowing that whatever happens, you have already accepted the maximum risk, then you are trading at the next level. You have stopped trying to manipulate the market, and you have started managing yourself. That is the ultimate indicator. The quiet, boring confidence that comes from knowing you have done the work, you have managed the risk, and now the outcome is simply a matter of probability playing itself out. If you are looking for confirmation that you are ready for the big leagues, look for the quiet. Look for the stillness. Look for the patience. The market is always there. The money is always there. Your job is simply to wait for the money to be handed to you on a silver platter. Don't chase it. Don't grab for it. Wait for the setup to be so clear that the opportunity is undeniable. This entire discussion, the psychological trap, the battle against the internal enemy, the discipline of waiting, the ruthlessness required for position sizing, it all comes down to the fundamental truths of speculation that have not changed since the ticker tape was invented. Everything I have told you here today about the necessity of waiting, about the danger of impatience, and about the sheer brutality of the market's demand for discipline, was learned the hard way by the greatest speculator who ever lived. He chronicled the exact moments he made the psychological shift from a reckless novice who traded constantly to a master who understood that sitting still was the key to making millions. He detailed the painful lessons of fighting the tape, of letting hope override his plan, and eventually of realizing that the man who waits is the man who wins. If you want the roadmap to internal discipline, if you want to understand the mind of a trader who mastered the art of patience, you must read the book that details this journey. I'm talking, of course, about Reminiscences of a Stock Operator by Edwin Lefèvre. I have left the path to this book below. It is there for the taking. Do not ignore it. School is out. The market opens tomorrow. Be ready.